What is up everybody, Gifford here and welcome to another stock market video. Today we're going to talk about one stock I'm buying, one stock I've sold, and also one stock I am currently holding. So let's get into it. So the stock ticker symbol is CELH, which is Celsius stock. So Celsius is an energy drinks company and it's currently down by 62% in the last 6 months. The share price has collapsed, however the business has become profitable and revenues have continued to go up. So a big plus for me is its positive PE and also its assets is more than its debts. And looking at the chart you can see that the stock price has been devastated as it continues to fall. So I see an opportunity here. So for those who've watched my previous videos about 2 years ago, I invested in a company called Tattooed Chef and that did not work out well. So hopefully this one in the food industry goes a little bit better. So Celsius stock is the number 3 energy drink in the United States. With the share price collapse, this could provide an opportunity for me to make money in this stock. I've also been aware of this company since 2021 and now it's low enough share price for me to consider. So the slides you see here, you can get that from their investor relations page, but I'll show you a little bit about that later. They've got rapid revenue growth, taking market share versus Red Bull and Monster, who are the other top players in their segment. The revenue is also slowing down year on year, however, compared to the share price collapse, I think that's an overreaction and might be an opportunity for me. So why am I investing? Obviously, the recent stock price collapse, and I also want to have a look at, again, another food and drink stock, learn more about how the business works. And I want to use the knowledge that I gained from Tattooed Chef and see if I can make my money back on that, because I did lose probably about $5,000 to $6,000 if I recall on that stock. So the revenue growth in Celsius is set to come back with global expansion, including New Zealand, where I'm from. So you can see a map there and what they're going to be doing in 2024, and we're now at the later stages of 2024 with about 3 months to go. So I should say there that I've tasted the drinks and I really do like them myself, although I'm not actually an energy drinker. Maybe 1 or 2 flavors isn't the greatest, but there's definitely 2 that I like there. So what am I doing? I've got a tiny position in Celsius already, and that's at minus 30%. Although I'm not too worried about that because that's only in my Sharesies private account. The other one I have is that I'm doing options in it. So I've done already 2 options, so they're put options, and the strike prices is $30 and $31. So for those that know about options, these are at the money, so therefore they pay a really good premium, which are $1.72 and also $1.26. This equates to 6,100 USD or about 10,000 New Zealand dollars, and the expiry date is respectively 11th and 18th. So I'm quite aggressive with these strike prices, and that's because I want to be assigned these shares, so then I could start writing covered calls to them. And on the right hand side over here you can see my positions that I've opened up on them and how much they have given me, and hopefully they will expire either worthless, so then I get to keep the money, or I actually get assigned the shares and then I'm happy to do covered calls, and I also own the stock as well. So full transparency, that there is my Interactive Brokers account with about 13,000 US dollars or $20,000 New Zealand. So moving on, the stock that I did sell was Onsemi, ticker symbol ON. So this is a semiconductor company and I have been talking about these before previously. They're currently down by 18% in the past year. So I have sold all my 20 shares in them for about $71, and that's kind of the price that they were about now. So I haven't really gained or lost too much in them. But just going off the share price, you can see it has been up and down, but that's not the reason why I actually sold in them, that they haven't been appreciating. They've got a good PE ratio at 16, but there is a bigger reason why I did sell out in them. So you can see here in the investor relations page, if you go to that link right there, you'll be able to see all the financial reports from 2024 all the way back to 2022. In the next couple of slides, I'm going to tell you exactly why I sold the stock. So we can see a previous snippet here of the presentation. This is the first quarter of 2023, and then supplying parts to EV makers. So hopefully that was going to increase their revenue and earnings by supplying these parts to more partners and different manufacturers. And as you know, revenue and EPS going up over time is what really moves the stock long term. It might go up and down for a short while, a couple of quarters, but eventually if there's revenue there and the earnings per share does come along, as well as they sell more products, then eventually the stock price will start heading in the right direction. And you can see here they were showing good growth. It grew by 38% year over year to record 50% growth there in automotive revenue. So they're doing pretty well. And just take note of the revenue here that they've got mentioned, which is 1,959 million. So moving on to the second quarter of their 2024 results, so a recent one. So they've got a lot of information and numbers here, but the one I want you to show is that the revenue, see that? So the revenue is only 1,735. So that is a decline of 200 million. Compare that to Q1 2023. So what that tells me, the decrease in revenue, that their plans that they set out in 2023 hasn't really worked out. So this is only about 5 or 6 quarters, and depending how you feel or how much conviction you have in the company, I don't really have that much conviction in them anymore. So I have decided to sell because I've been looking at them, figuring out if they can actually sell more products, what they're doing in their R&D, how they're able to drum up sales, and I just don't believe that they're able to do that. So I want to show you that in a more basic form in a website called Stock Analysis, show you their revenue and just their gross profit. So it's just not the last 6 quarters that I've shown you here. I have looked looked at them in the last 3 years, and I finally bought them in 2022 for their growth, but I just don't think that they can ever get there. So I'm happy to take my money out and put it into something else that I think can make money, which is Celsius stock. So here with Onsemi, you just click over to financials and hit income, and then you'll be able to go to this page here. But you can see in the revenue that it has been declining. So when they put out that news, you can see here in 2020 that they're sort of showing growth. I thought it was looking really good. And then after in 2023, it's been flat and then going down. The TTM stands for the trailing 12 months because obviously 2024 hasn't come out yet. And if you look at the gross profit, you can also see it has been slightly declining, which is I'm really wanting to see a growth, and that's gone. So that's why I'm happy to sell the stock. So moving on to the last one, which is Tesla. This is the stock that I currently hold. And the 1 year performance of Tesla is actually negative if you look at the stock graph here. So if you bought 1 year ago and then you sold it again, then you'll still be down by about 3 to 4%. And you can see here the PE ratio is getting pretty crazy again. And if you did not buy shares while it was down below $140 and average yourself down, you would be well negative still. And just remembering that the price we have now at $250 is still 40% less from its all-time highs. And if you decided to buy Tesla, you would be underperforming the S&P 500, which is currently at plus 20%. So this is the Tesla stock that I currently hold. Just to show you, I've got 56 shares, or just underneath that. On the left hand side is my private Sharesies account, so that's at 20 shares and it's up 22%. We have my own account here on Hatch, so I've got 10 shares of that, and it's a cost average. It's got a quite good cost average here at 178, so I was buying on the way down, and that's currently up by 40%. And then another Hatch account, I've got almost 26 shares in there with an average just under $200, and that's currently up by 25%. So one of the many things that comes up again is Tesla's demand. Will people eventually stop buying their cars? This rapid growth of them selling their EVs, will it just slow down? And this conversation comes up every year because obviously they are a new company. In the last 5 years, they've only actually been able to scale up, right? Before 2020, you didn't know if people would actually buy their vehicle, the Model 3 coming out, and if they could bring the price down enough that people bought. And eventually they did bring the price down a little bit and everyone bought their cars. So going down here, we can see that Musk says that they do not have a demand problem. So back then, we'll see, back in 2022, did they have a demand problem? So let's have a look. And knowing about the future now, we know that, hey, look at this, in 2022, did they have a demand problem? Well, you can see, yeah, they kind of went low here in Q2, but then after that, people decided to buy more of their cars. And over here is the total amount of cars and the deliveries. So this is a quarterly graph, and you can see it going up. And so in Q1, it has declined, but it does decline in Q1 for every year, and then sort of start ramping up. But we don't know yet what Q3 is going to bring for us, but we can see that it has slowed down or you know, kind of topped out a little bit. So we are heading back again. But usually this is what they talk about. When will, you know, Tesla is priced so highly that when will this growth actually stop, or has it already stopped, is really what people are talking about. And just to point out the obvious, if they sell more cars, their revenue goes up, their earnings per share go up, and then this pushes the stock price higher. And the next one that's coming up for Tesla, why I currently hold at the share price of $250. So I'm happy to buy sort of maybe around about 150, but nothing at the moment because I've got enough shares. But the 10th of October is going to be the big event, and that's it here. It's a little promotional thing that they've got here. And this is really going to show us what they're going to do next. Are they going to bring out the whole robo-taxi thing? How's that going to work? Personally, as usual, it's just more hype. It's obviously not valued as a car company, because if it would be, then I'm pretty sure the share price would be about $40, but it's not as valued as a technology robot company. That's why you're paying $250 a share currently. And I am invested in them because I think they are more than a car company. The share price, well, I know it's overvalued, but hey, this is what it is, right? I'm buying it for the hype as well. So just showing you in the slide here, there's a website called Alpha Spread, and what it does is you just put in the ticker symbols. The free version lets you put in like 3 ticker symbols, and it actually gives you what the DCF method is. And DCF is just really understanding its intrinsic value, and you can put on all these figures. I'm too lazy, right, to try to figure out all these financial things. I don't know how to exactly, you know, work out all the metrics of trying to find the stock price and intrinsic, where they're going to be. There's a lot of numbers involved. Basically, I look at it and go, right, are they going to make money in the long term? Do they have enough products that they're going to sell? Are they going to be able to push the earnings up, the revenue up, to eventually push their share price up? The two that I've got is Celsius and Tesla, and that's quite a big one, right? So Celsius, I've got priced at the moment at $35. So the current price of Celsius right now is around about $30. So they reckon it's undervalued. Hopefully the options that I do does make me some money, but it's a good price at around about $30. And the other one that we've already talked about is Tesla, and the intrinsic value of Tesla they have here which is the base case. If you click on the best case, the price goes up a little bit, or the worst case, the price goes down a little bit, but the intrinsic value for the best case is $58 for Tesla, which I think is pretty fair, right? For a car company, yeah, sure, you can value it like that. So obviously these guys do not value it as a technology and do not believe the hype. They're looking at the numbers, but I'm buying Tesla for that rapid growth that can happen. And when that growth happens, usually the share price will shoot up and you don't get a chance to buy because the share price will be ridiculously up. So what we're trying to do is we're trying to predict that they are going to get into that market, make all that money, and then therefore that's going to push the share price a lot higher than where it is now. So that is one stock I'm buying, one stock I sold, and also one stock I am holding. So let me know your thoughts about those companies. What do you think about what I'm doing? Is it a good idea? Is it a bad idea? Is this another tattooed chef? Don't know, let me know your thoughts. If you're interested to hear more from me, feel free to follow me over on Instagram, where I post about stock market news and what I'm doing in the markets every other day. The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use Investnow for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. Hit like and subscribe, as it helps the channel out and also gets my videos out there for anyone that wants to watch of someone who's just sharing what they're doing in the stock market from New Zealand. And click this video here if you want to watch my total stock market portfolio. I go over them, and in future videos also, I'll just go over, I have 3 main portfolios. So I want to show why I have these portfolios and then kind of the strategies behind them, because I am still learning. I've been doing this for about 4 years, but I'm still learning as well. I know I should probably just put all my money into the index funds, but that's really not that fun. I just want to learn all these different strategies and see if I can actually beat the market. Thank you for watching, and I'll see you in the next video. Goodbye.